Imagine a market that is needed by the whole world and three companies that pay out dividends, sometimes over 10%. We're talking about an industry that benefits from the offshore energy boom and is now getting really exciting. Stay tuned, especially stock number 2 has a lot to offer. Once again, I'll be completely transparent and show you my entry prices, as well as how much dividend I've already received and how many shares I generally hold. Let's start now with stock number 1, which is Dorian LPG. The business model, transportation of liquefied petroleum gas, LPG, benefiting from the energy transition and LNG demand. The current dividend is 10.86%. The current balance sheet shows the following. We have low debt and as a result high financial flexibility. And a solid free cash flow secures the dividends. The fleet consists of approximately 25 VLGC ships. The average age is about 9 years. That means the fleet is relatively young. This means that no massive investments are necessary. Management has a strong capital allocation. Management pursues a strong and disciplined distribution policy here. What is the current market outlook? LNG remains a driving force. Limited fleet growth supports the charter rate. Conclusion: for income investors with a willingness to take risks, this is one of the strongest LPG options. Now, as I mentioned at the beginning, let's take a look at how we are invested here. My entry price back then was 21.73 euros. I hold a total of 81 shares. I had invested 1,759 euros and 84 cents. I have already received dividends totaling 293 euros and 75 cents with cost of 30 euros and 41 cents. The current value is 2,071 euros. That corresponds to a capital gain of 311 euros and 33 cents with an overall price performance of 17%. Exactly. You can just take a look at the other data yourself. Gross dividends are 293 euros and 75 cents. Net dividends are 288 euros and 9 cents. All in all, including the capital gain, we are at 605 euros and 8 cents. Taxes amount to 5 euros and 66 cents, fees to 24 euros and 75 cents. That results in a total sum of 574 euros and 67 cents that I am in the positive. I also made several practical purchases, as you can see here. Now I'll briefly go through all the activities, and then you can see I started buying the stock in December 2022. After that, I made additional purchases from time to time. Also, simply because they pay such nice and strong dividends in the end, for me, it's actually one of the largest positions in my portfolio. What you can also see very clearly here is that we currently have a dividend yield of about 10.86%. And the dividend has even been growing for 3 years now by about 63.49%. But it should also be mentioned that Dorian LPG has paid out very strong special dividends as well. For example, in 2024, we had a total sum of 3 euros and 70 cents, and in 2022, we even had a dividend yield of 28.88% from 5 euros and 17 cents. Why am I holding all of this? In my opinion, I simply bought at a relatively low price back then, especially if you just look at the overall performance in general. Given the current dividend yield and the fact that, in my opinion, the company is fundamentally so strong, it would definitely be a buy for me. And here, I also like to buy countercyclically, especially when the dividend is paid out again and the price drops a bit afterwards. For me, there is currently a price range where I would definitely buy more. Back then, I set it at 19 euros. Personally, I feel that 19 to 21 euros is quite a good price range for buying more. So I would say let's take a look at the whole thing with InvestingPro to see how it all stands. I mean, of course, I've already mentioned the main key factors. Let's just quickly go through it so you can see how it's generally structured. And you can also look up other key figures yourself that might be missing here in this brief overview. That might have just been missing in this short summary. All right, so I'll just show you really quickly. So now we're on InvestingPro. This is where I do, among other things, my fundamental analyses and take a closer look at everything. My affiliate link is also in my description. If you want to use the tool, feel free to do so using my link. By doing so, you'd also be supporting me, since I would then receive a small commission, so to speak. Here we can currently see the financial situation in each case. We can see what the analysts estimate as their opinion. And the current market range was between 15 and 37 euros. Although I really have to say, in my opinion, from 19 euros on, that's already a very, very solid base. The analysts' recommendations or targets are between 28 and 65, as you can see. Yes, you can also see here that since 2020, from 3 euros and 46 cents, the stock has, you could say, simply exploded. And if you then combine that with the dividend, just imagine you had bought this stock back then at 3 euros or at 5 euros, and in 2022 you received a full 5 euros in dividends. That means you basically got back the entire cost of the stock. And in my opinion, that's already a huge opportunity, which is why it's so great, especially if you have experience. Some stocks, depending on the sector phase, can potentially generate so much cash flow. And then they simply pay that out to you, allowing your dividend or your yield on cost to increase massively, or ultimately your yield on portfolio value, especially if the share price performance also rises. But that's just another kind of, it's just such a crazy dividend play in my opinion. That's why I'm so bullish on commodities, or in general on cycles. You can buy more at a low price. If the cycle goes really well, you can also get very good, yes, dividends here. But of course, you always have to make sure that you get into the whole situation at a good price and not at the peak. So long story short, let's move on. We can see here that the payout ratio is currently at 173%. That's also because in LPG, a lot of special dividends are being paid. But what you can also see right now with the earnings is that they're also going down a bit. That's also currently because back in March, a lot of shipping stocks were at rock bottom. That was simply because all these Baltic dry index rates and all the charter contracts, especially for the spot market, were just cheaper. So they were simply at the bottom. Just like all the commodities, really. And I think that's going to pick up again soon. But that's just my opinion. Exactly, here you can really see a normal, completely balanced sheet. Just a simple sheet. As I said, I've already told you the most important and noteworthy things briefly and concisely at the beginning. What you can also see quite well here is that you can compare yourself with other providers. Directly, that is here with Dorian LPG. You can see how the others are performing among others. You can also see the fair values directly here and what potential there is. It's actually pretty cool. For example, I also hold BWLPG here, and you can currently see here that it's undervalued. Yeah, and this way you can quickly get a brief comparison with the competition. Exactly, I already mentioned the financial situation, and we're definitely in good shape there. And here you even have everything you could possibly combine. The current share price, in this case, not at 50 and 200, SMA meaning smooth average. Then we have a ratio versus peer companies. Exactly, here you can see revenue and profits again. Then you can see the free cash flow yield. You can actually see that it has decreased a bit recently. I think that's simply due to the charter rates. So because of all the indices for shipping, since they were a bit lower, and in my opinion, as I said, it's picking up again, and that's why the free cash flow is also being pushed down. Exactly, that was already quite a big insight into Dorian LPG. I also talked a lot about the surrounding context, but anyway, I would say let's continue with the second shipping stock. And this one is about TORM. The business model is product tankers for diesel, gasoline, and other oil products. The dividend is currently at 8.47%. However, this is regular and also reliable. The balance sheet shows the following. We have hardly any debt. We have strong free cash flow. We have a fleet of about a total of 85 ships in the fleet. The current average age is about 11 years, so it's well diversified. And we have ongoing modernization. The management can demonstrate the following: high operational efficiency and clear cost control. What is the market outlook? The oil market remains fragmented as longer routes increase freight rates. What does the geopolitical situation look like? The sanctions play into TORM's hands. Conclusion: the safe haven among the three. High dividends with moderate risk. So now let's open TORM again and I'll show you all my insights. So now let's take a look at TORM and how I am invested. Currently, I had an entry price of 1,759 euros and 12 cents. That corresponds to an average price of 15 euros and 99 cents. The current value is 16.53 euros, a total of 1,818 euros and 30 cents. We have a price performance of 3%. That amounts to 59 euros and 18 cents. And we have received a total dividend of 60 euros and 70 cents. Don't let the value confuse you. I actually have 2 brokers here in total. Right, now let's take another look at Torm on InvestingPro exactly. Here, the current 52-week range is between 11 euros and 36 euros. I think with Torm, it was the case that we were already at about 14 euros really. There was a very strong bottom, or rather a very strong support from the call fair side. Exactly, the current analyst rating in terms of prices around, yes, considered fair at 21 euros and 8 cents. As I said, I'll go through it again. You can take a look at the numbers yourself. I've already mentioned the most important ones. Here too, the payout ratio is higher at 118.96%, among other reasons, because Torm sometimes has higher charter contracts when things are going well, because they also operate a lot on the spot market. They often pay out a lot, sometimes even special dividends. And here the dividend at Torm is at 21.06%. Of course, the payout ratio is at 118.96%, partly due to special dividends. Here is the complete balance sheet again. Here too, we again have certain comparisons that we could look at accordingly. These are practically the competitors as well. I also have to say, of course, that for my strategy, I logically prefer those that pay dividends. TK Tankers is actually also in my portfolio. Exactly. And I also have energy stocks, but that's not the focus here. That will come again in part 3 then. Then here we have the current health situation. Here we can see a generally very good financial performance. These are basically all the criteria that can represent the whole thing well. Personally, I have to say, when I buy something, I actually don't look at that many things. Most of the time I just look at TradingView to see if the price is in a favorable zone, if there's any resistance or anything like that. I mean, I can just quickly show you. I'll just go ahead and do that quickly now. Exactly. So let's take a look at how I would do it. As an example, I'll just use Western Union because that's the last one I invested in and analyzed recently. So what I usually look at are certain specific, I'll just call them zones for now to put it simply. So these are things that could potentially be of interest or that might be interesting. Here we see a strong rejection to the downside. But that means it was rejected because there was simply buying pressure. And we can also see here that this zone held up pretty well. It's not really about going deep into the analysis. I just want to briefly show how I analyze this in practice. And for me, it's about just the simple fact, okay, we're now at 8 euros and 10 cents, while the value back then was 27 euros at its historical maximum. And then I come up with a bit of a risk factor, and then I look at how the company is doing. Then I take a look at the company. If the company is solid, of course, with a bit of risk, because for some reason, sometimes it gets sold off. Sometimes that's justified, sometimes not. Sometimes it's completely irrational. And then I say to myself, okay, we're at 8 euros now, but potentially there's an upside of 130%. Then I think, okay, why not? You could go in with a small amount, definitely, and then invest accordingly, depending on what kind of stock it is. Of course, if it's really something like Dorian LPG, let's take that as an example. I also analyzed it as a sample framework. They're at 0.168. The FIB would theoretically have been a buy at 22 euros. As you know, I bought more at around 21 euros, or at the latest 22. And that's roughly how I analyze it. So that means I look at it here. I have to say it was from 2020, so that's already quite a while ago. But I just look at the whole thing overall. Yes, and here I marked a line that simply came back strongly as a pullback at 1673. In fact, I also invest a little bit on behalf of my parents. And yes, they simply bought at 1544, which obviously means they're already nicely in the profit. Yes, and that's just how I analyze it. So to make a long story short, sorry that the video is getting so long, but I just look at the complete overall picture. And if, in my opinion, it's the case that I say, okay, it's not at the peak right now, but maybe more at the average value. But you don't want to buy at the average value either. You want to get in at a low point. And that's how I do it. Well, all right. I didn't actually mean to go into so much detail. It's just so you can see how I roughly approach my analyses. So for me, what's important is whether the company is fundamentally sound, whether it can maintain its dividends, and whether the current entry price is attractive. If it's too high, then I honestly just keep my hands off because I don't chase after anyone in the market. Then maybe I'll put it on a watch list and say, okay, in the next cycle, if it comes back down again, usually in October, as we all know, then I'll just buy in cheaply again. But I don't chase after it because I simply want to maximize my dividend, so to speak, by getting in at a really low entry price. Of course, you don't always catch the bottom, and sometimes you slide further down. That's okay and completely normal. The important thing is just to know, okay, I have a good stock here and it's fundamentally sound. Now, maybe it's dropped by 10%. Well, okay, then I'll just buy more. So what's the problem? So we've already discussed everything so far. I had already shown all of that as well. So I would say let's continue with the last stock. And this one is about Frontline, the business model, crude oil tankers. Frontline is one of the largest players in the world. The dividend is at 3.84%. In return, we have strong dividend growth potential. The balance sheet. We have a payout ratio of 48%. We have John Fredrickson as an anchor shareholder. And we have an extremely experienced management team. The fleet consists of approximately 70 ships with an average age of about 7 years. That means of the 3 stocks I presented, this one has the newest fleet. That means it's very modernized and has low maintenance costs. What is the current market outlook? Hardly any new builds are planned until 2027. This means a supply shortage is becoming more likely. Oil transport to Asia is growing. This means that strong price dynamics are possible here. Conclusion. For long-term investors, this is a dividend stock with strong growth potential. So let's take a look at our entry points and how much dividend I have already received so far. I entered at 14 euros and 92 cents, a total of 462 euros and 63 cents invested. We own, or rather I own, 31 shares with dividends received totaling 23 euros and 42 cents. That brings us to total cost of 6 euros and 25 cents. Currently, we have a price gain of 7.88% and a capital gain of 36 euros and 48 cents. To be more precise about it, you can see every single bit of this information again as well. That corresponds to a net dividend of 22 euros and 12 cents. Altogether, including the price gain, that's 59 euros and 90 cents, all taxes and fees. After deductions, that amounts to a profit of 53 euros and 65 cents. Then let's take another look at the whole thing with InvestingPro. Just like I said, the 52 weeks. The 52-week market range, the current 52-week market range is between 11 euros and 22. Currently, we are at 16 euros and 40 cents. Personally, I think I would get back in at around 14 euros. At the moment, I'm not buying more, but that generally applies to many commodities, actually. Currently, in my opinion, many are already doing quite well in the green. We can also take a quick look at that at the end, or rather, I think that would go beyond the scope here. I would say I'll make a new video with a new portfolio update. Then you'll be able to see how much certain things may have already increased. And I still need to declare the dividends for June and July, I think. Just so you have that on your radar, I would of course be happy if you tune in and then we can do what we want to do. As I said, we've already gone through all of that, or as discussed, it's all already been mentioned. Let's quickly go through it again. Here too, we can see that the earnings, just like with the other shipping stocks, have also dropped a bit. That's currently because the spot market is or was relatively at the bottom. I think now it's slowly starting to go up. But we can also just take another quick look at that one. So now let's take another look at the end. Let's briefly look at the freight rates. First, we'll analyze the whole thing for Dorian LPG. For this, the Baltic LPG index is responsible as it measures all of this. And here we can see that in November 2023, we had a peak accordingly. Then we dropped down. January 2024 was a very good entry point for the stocks, I would assume. And accordingly, August 2024 as well. I would say with that, we will end our analysis of these 3 stocks for today. I hope to see you in the next video. If you enjoyed the video, feel free to leave a like and also subscribe. See you in the next video. Yours, MB Capital Strategies.